I'm going to share with you 3 of my top performing ETFs. And whenever an ETF is a top performer, it's one of my favorites. So these are definitely going to be 3 of my favorite ETFs right now. 2 of which have given me over a 24% return on my money since I started investing in them. So these are some ETFs you're not going to want to miss. Welcome to the channel. My name is Paris Clough and this is Financial Self-Reliance. I absolutely love helping people manage, protect, and grow their money. And in this video, we're going to talk about how to grow your money. So what is an ETF? An ETF is an exchange-traded fund. It gives people like you and I the ability to get into the stock market, diversify properly, and not have to worry about which stocks to pick because an ETF will do all the work for us in terms of diversification. We just need to put our money in and contribute to it on a regular basis. But you still want to be wise and prudent about which ETFs you're choosing. So let's jump right into my portfolio. And I keep all of my ETFs on my M1 Finance portfolio. If you join M1 Finance with the link in the description below, you'll actually get the ability to have $50 credited to your account when you open an account with them. So I don't know any other way where you're going to get $50 free. And in today's economy, $50, that's, well, actually it's probably only 2 or 3 gallons of gas, but $50 can go a long way. So use the link in the description below and open an account with M1 Finance and get your $50 free. So this is my portfolio on M1 Finance. I have M1 Finance divides your portfolio up into what they call a pie, and the pie then has slices, and those slices then can be broken up into their own pies with their own slices. And I have in this particular pie, I have 3 slices that are all ETFs. These ones down here, well, I have an ARK ETF, but that one was really performing poorly right now, so I'm not going to be discussing that. But the 3 ETF categories that I have are REITs, which are real estate investment trusts, and then I have dividend ETFs, and then I have my indexed ETFs. So let's first take a look at my indexed ETFs. The tradition is with indexed ETFs is that everybody recognizes that very few money managers can ever outperform the index. So most of the greatest investors of all time will tell you that if you just want to be able to have a set it and forget it type of investment, that you should just pick an index like the S&P 500 or the total stock market, which is VOO and VTI in my particular case, that you're going to have a great opportunity to have a rate of return that's excellent over a long period of time. In fact, Warren Buffett is famous for saying that if he was to give his family counsel about how to invest, he would tell them to just pick the S&P 500 in an index in an ETF and just put money in there on a regular basis and see how that goes, because something like 7 or 8 out of 10 money managers can't beat the index. So it's a great idea to have the index, although right now you are seeing the index is getting hammered. So a negative 2.9% for my VOO, negative 10% for my VTI. So right now the index ETFs aren't performing that great, but in the index ETF slice that I have, my best performer is this VOO, which is the Vanguard S&P 500. So let's take a look at what Seeking Alpha has to say about VOO, and I'll share with you a little bit about how I use that information to research my ETFs. So VOO right now is trading at $383 a share. It's down 0.5% for the year. I bought a while ago, so that's why it's down a little bit more for me. Right now it has a dividend yield of 1.44, which is a decent dividend yield. But here's what I want you to look at right here. Let me zoom in a little bit on that. Can you see where it says expense ratio? Expense ratio is something that's critical. Most of the funds that you'll look at are going to have an expense ratio. So their rate of return might be great, but if their expense ratio is a significant number, that means that all of the money you're earning is going to be eaten up by the expense ratio, because that's what they charge you to have your money in their fund. So what's good about this expense ratio at 0.03 is that it's very inexpensive. It's really cheap. Some expense ratios are very high, and I'll show you in a minute what I mean. So let's go back to my M1 Finance portfolio and take a look at the next set of ETFs. So I want to take a look now at the dividend ETF pie, and the slices that I have in this particular situation. Right now, SPYD, which is my favorite ETF right now because it's paying the most, it's a 25% return since I've started investing in it. 25% rate of return since I started investing, and that's why SPYD is one of my favorites right now. So let's take a look at what SPYD is doing in the market. So right now SPYD is trading for $43 a share and $43.33. The expense ratio is 0.07, which is still a good expense ratio, even though it's twice as much money as the last one. But with the rate of return that I'm getting, 25%, I'm willing to pay a 0.04 more to have a better rate of return, if you can see what I'm saying. Also, the yield here is 3.62%, so that's the dividend yield. This particular ETF is a dividend yielding ETF, and you want to have a strong dividend when you're investing in dividend ETFs. Right now, it looks like it's kind of in the middle, towards the higher end of its 52-week range. So I feel like it's something that I like to have in my portfolio. It's got a great yield, great rate of return. The 1 year is 8%. The 5 year is 22%. So you can see that in my particular portfolio, I caught it just at the right time to have a 25% return on my investment since I started investing in Spider. And that makes up for all the losses that I'm having elsewhere in my portfolio. So it's nice to have some of your portfolio gaining because during downturns like we're seeing in the market right now, as of the recording of this video, it's nice to be able to have some of your stuff moving the right direction. So let's take a look now at the last slice in my pie, in my overall portfolio pie here, and that's the REIT ETFs, or real estate investment trusts. Now, if you want to invest in real estate, but you're not really sure how to buy a house or rent a house or fix a house and flip it, real estate ETFs are a great way for you to put some money in, and that's what real estate ETFs do. Is different ETFs will buy houses, they'll rent them, they'll flip them. Sometimes they're not houses, sometimes they're apartment complexes, sometimes they're commercial properties. Anything and everything to do with real estate, there's some ETF that will do that or work in that field or that sector. So it's important for you to recognize that if you want to invest in real estate but you're not sure how, sometimes you might be okay starting off with an ETF in the real estate market so that you can get some exposure there in the real estate. Right now, my best and most favorite ETF in the REIT pie and slice is REZ, R-E-Z, ticker symbol R-E-Z. 24.88% return since I started investing in it. That's how much I've gained in my portfolio with that one ETF. Fantastic ETF. Let's take a look now and see what it's trading for over here on Seeking Alpha. Right now it's trading at 93.72. 18% is the 1 year, so you can tell I've had it for a little longer than a year. 5 year is looking like 46%, so that's a really good REIT. And the yield, the good news is that beyond having a real estate investment trust or having it just focusing on real estate, is it also provides a dividend, and the dividend is 1.7%. Now you'll notice that this particular expense ratio is almost 0.5%, so it's quite a bit more expensive than the other ones that I shared with you, but you're getting a much better rate of return, so the growth on this is fantastic, and you also have a dividend yield of 1.7, which offsets that. So it is more costly to have this one because of the expense ratio, but it's offset by the growth and by the dividend yield. So just to recap really fast, my 3 favorite ETFs right now are VOO, ticker symbol SPYD, and last but not least, ticker symbol REZ. Those are the 3 ones in each of the sectors or each of those areas of REITs, dividends, and indexes that are paying me the best percentage. Now let's take a look at my Dividend Tracker. The Dividend Tracker is an excellent platform. There's a link in the description below for you to take advantage of that. There's a free version which gives you kind of a trial look at what's going on. It basically grades the different dividends that you have. It gives you great tracking research capabilities, and allows you an opportunity to kind of get see your overall portfolio and how's it doing all at one dashboard. So in this particular, the Dividend Tracker, I highly recommend click the link in the description below, sign up for the free version, and if you're ready to upgrade, do the paid version, because when you do the paid version, you actually get access to the Discord channel where we talk about all things dividend investing. One other way that I kind of have used in the beginning to get started in my ETF investment is to learn about what ETFs are, and there's a lot of great YouTube videos out there. I just did a quick search, best ETFs of 2022, and these all came up. You can see Warren Buffett has an interview here. Somebody posted that. There's some great information out there on YouTube, much like my channel, and there's other channels out there that are performing and putting up some great content. So once again, if you want to have that opportunity to have passive investments where you're just putting your money in there and you're just letting it go and grow, the best way to do that is with ETFs, indexed ETFs, real estate ETFs, or dividend ETFs. Oh, before I go, let me show you something that I wanted you to see here. So on M1 Finance, you can come here and you can do some great research over here, and then you can click across the top and it says stocks, funds, pies, expert pies, watch list. So if you click on funds, it will actually filter everything but the ETFs or the funds that you want to look at. So you can search here for assets under management, you can search here for the best one with the dividend yield, and you can see here that this is a great dividend yield, 58% dividend yield, but you look over here and you see it's lost 41%. I don't care about a 58% dividend yield if I'm losing 41% of my money, and it cost me 1% in the expense ratio. So those are some things to look at. Don't get so excited about 1 or 2 aspects of a fund. Make sure you're looking at the overall picture of the fund, and you're choosing based on what's called a golf score, where you're looking at the yield, the assets under management, the price history, the expense ratios. You're looking at all of those things to determine which is the best one. So for example, you got this one here that's a 9% expense ratio, it's a 19% growth rate, and a 9% dividend yield. Well, if the expense ratio is more than the dividend, it's like, am I paying my own dividend? It feels like I'm paying you to pay me the same amount of money. So just be careful when you're out there studying these funds to make sure that you're doing the things that you need to do and looking at it as a whole so that you're picking the right ETFs. If you missed the last video I produced, you can find it here. Go ahead and subscribe to the channel up here and check out this video that YouTube thinks you might like. I hope you have a great day, and I look forward to seeing you on the next one.